Good afternoon, everyone. It's always a pleasure for me to be back in Singapore, the place to be for many aspects about financial innovation. When I had the pleasure to explain to my colleagues in charge of the supervision of Financial Sector International that I would be there in Singapore with an audience of 60,000 people, they didn't believe that we could have such an audience. I would say, especially as a financial supervisor. And that's the reason why, ladies and gentlemen, I am so delighted to be joining you today in my capacity as chair of IOSCO. I'm not sure that everybody knows what it means, IOSCO. I could also ask the question, who knows who is the IOSCO? Except the colleagues from the village IOSCO. So it's quite normal. But just to explain who we are, IOSCO, it means one of the few real global membership organizations of financial supervisors. And it means that we have more than 130 jurisdictions on board. For instance, our colleague and friends from the Monetary Authority from Singapore. So it means that all members at national level are involved in the supervision of, yes, indeed, it's the truth, I am not exaggerating, our members are in charge in various capacities of the supervision of 95% of the global financial sector all around the world. It means also that we have a very important growth and emerging market committee with more than 70 jurisdictions on board. And so that's the reason why we thought that we had to be on board in order to take action about new steps related to cross-border regulation of crypto assets. Just to the fact, because IOSCO is a recognized international standard-setting body for securities market regulation. What does it mean, in fact? It means that we are developing, implementing, and promoting adherence to internationally recognized standards for capital market. And the reason why we are taking so many initiatives, not only about crypto assets, but about sustainable finance, about NBFI, non-bank financial aid, the former shadow banking, the reason is that IOSCO is uniquely placed to take up this challenge as a truly global membership with over 130 jurisdictions. And that's the reason why we decide on time, before some collapses, before the crypto winter, to launch in March 2022 a new FinTech Task Force. And why IOSCO? IOSCO, it means how to avoid fragmentation of market, how to avoid fragmentation of regulation. And that's the reason why it was so obvious that we need to start a new work stream and, in fact, a FinTech Task Force. And given the cross-border nature of crypto market, the risk of regulatory arbitrage and the significant risk of harm for retail investors, very important, consumer protection, John and Mary industry, that's part of our DNA. One of the primary goals of the FTF has been to promote greater consistency in how IOSCO members approach the regulation and oversight of the crypto asset activities. Time was important. As new chair of IOSCO 1 year ago, the speed was one of my priorities. And time of the essence, and IOSCO is committed to delivering policy to tackle this risk, to protect investors and market integrity by the end of 2023. Well, ladies and gentlemen, dear colleagues, I am very pleased to confirm that today we are delivering to this commitment. And this is, ladies and gentlemen, what you have to read this afternoon. The new toolkit for the sake of the implementation of supervisory action relating to cross-border crypto asset service providers. It takes more than up to listening to a pitch of 6 minutes, because it's a document of 72 pages, but I think it's worthwhile, because so you will understand how we are working together in order to ensure and to enhance the level of protection of cross-border activity performed by crypto asset service providers. So it means, ladies and gentlemen, that today is an important milestone for our FinTech Task Force. It has just been released on the website of IOSCO. But what does it mean? It means that in May of this year, we consult on 16 policy recommendation to tackle the investor protection and market integrity risk posed by centralized crypto asset intermediaries and crypto asset managers. Does it mean that we are working in an ivory tower, that we didn't pay attention to the comment made by all these people in the executive committee? Not at all. We, of course, had the pleasure, the duty to organize a real consultation. 80 comments, no pushback for the industry, because many people in the industry understand what we are doing in order to have an appropriate framework to ensure reliability on the quality of the service provided by many crypto asset service providers. And today, we are publishing the final report, the first one to be published at international level. But I have to say, I am only the sales representative. All the people who have been able to do that are there. These are the real workers, and especially the members of the task force chaired by Tuang for the Monetary Authority of Singapore and Chain of Tier. And thanks to the colleague, we are able to deliver to them. Please, your applause for them. They deserve it. I will limit my comment to 3 main messages. Why are we there? In order to be helpful to tackle risk and deliver regulatory outcome. What about DeFi? We are not against financial innovation. At the contrary, we try to facilitate, I would say, the development of financial innovation, which can be very useful for John and Mary industry. And last but not least, yes, we are cops. We are proud to be financial cops, and it means what's policy without implementation. First message, tackling risk and delivering regulatory outcomes. This recommendation, in the meantime, we have now 18 recommendations about inflation, and these 18 recommendations are designed to support consistency in the way crypto asset market activities are regulated, in accordance with the principle, the well-known principle of same activities, same risk, same regulation, regulatory outcomes. What does it mean? It means that what we are proposing is not a kind of new revolution. These principles are well known by many of you. If you are active for some years as an asset manager, if you are working for a trading venue, a stock exchange, all these principles are well known. All my colleagues are used to work with that for many years. And due to the fact that we are promoting the well-known principle, same activities, same risk, same regulatory option, it's quite obvious that we need to some extent copy and paste some of these principles, because it just demonstrates the underlying crypto activities are actually equivalent to those observed in the so-called traditional financial market. And it means also that the associated risks are also the so-called bread and butter ones that our members supervise and enforce on a daily basis. What are the principles? How to manage and to prevent conflict of interest. How to prevent, to mitigate, and to fight against market manipulation. How to avoid, how to enforce possible case of insider trading. How to ensure custody of your client. Is it a real revolution? Not, of course. That's what we are doing every day, I hope. How to avoid cybersecurity risk. How to ensure an appropriate level of client assets. And of course, how to be able to have an appropriate level of, I would say, distribution and retail investor expectation, plus, of course, cross-border risk and the need to enhance the cross-level cooperation between financial supervision. So it means at the end of the day, ladies and gentlemen, dear colleagues, most of the time, not a revolution, just to copy and paste what we are used to doing for other kind of business, which are in fact not so far from what you are doing if you are managing a crypto asset service provider platform. And what does it mean in other words? It means that in fact we must therefore apply a regulatory approach that is consistent with the well-known IOSCO principle and associated standards for securities market regulation. And while recent advancement in financial technology with respect to DLT are to be welcome, the initial promise, we have to say that, of decentralization and disintermediation of finance within the crypto asset ecosystem has failed to materialize in practice. And if the technology is to deliver in its promise, we must see real use cases and true utility in the form to effective service provision, cost savings, and efficiency. That was the first message. Second message, what about DeFi? Another work stream, also managed under the umbrella of the FinTech Task Force chaired by the Monetary Authority of Singapore. DeFi is perhaps, I think that I may say that, more challenging for regulators. And that's the reason why we have separately consulted on policy measures for decentralized finance. And we will finalize those measures by year-end. You can expect a paper, Valerie is there from the SEC, more than 120 pages. You see, the number of pages is increasing every time. So it means that the DeFi recommendations are more principle-based and less prescriptive than the CDA, crypto digital asset regulation. And their primary focus is on risk identification and monitoring, capacity building, and cooperation. At the end of the day, it means together, DeFi recommendation and the CDA recommendation released today are designed to complement each other. And together, they will provide for sure a clear and interoperable policy framework and achieve regulatory outcome consistent with those required in traditional financial markets. And once implemented across IOSCO member jurisdictions, which means, again, 130 jurisdictions, consensus-based, the full board of IOSCO support all this regulation and approve them. It means that once implemented across IOSCO member jurisdiction, this regulation will bring about significant change in the way crypto asset market are. Last but not least, third message, what is policy? What is policy without implementation? We have an excellent paper. It's now time to start the implementation at national level. And this is why, beyond the delivery of policy recommendation, we will now turn our attention toward adoption and implementation with a clear roadmap for the next 3 years. So it means, in other words, that we will be coordinating effort with other international organizations, such as the FSB, Financial Stability Board, which is delivering message to the G20 leaders, the well-known FATF, the Financial Action Task Force. Some of the speech were related to the job to be done in order to ensure that you have an appropriate level of implementation of measures against money laundering, and of course the IMF, to name a few. We acknowledge as IOSCO representatives that jurisdictions are at different stages. There is no level playing field for the moment. And we acknowledge that jurisdictions are at different stages in tackling the risk presented by crypto asset market. Some jurisdictions have indeed existing regimes that already apply to crypto asset, while other jurisdictions must develop new bespoke framework. Well, that's exactly the added value of the TUSCI, is to be helpful for our members. And while recognizing the legitimacy of adopting different approach, our policy framework promotes substance over form. That's the price to pay in order to ensure a real successful cross-border cooperation. And while some flexibility is provided for regulatory authorities in their implementation, the crypto and digital asset recommendation that we are now publishing today will set a clear and robust international regulatory policy baseline to mitigate the sizable and proximate risk to investor and market posed by CD activities. In other words, the development of an effective regulatory framework is not solely the task of regulator, but rather a joint effort of all of you. It means, but rather a joint effort with all the crypto asset market participants. And this provides crypto asset service provider with the opportunity to restore some credibility by bringing activities into alignment and compliance with accepted, well-known global standards. But beyond the usual mechanism, we have also additional toolkit. That's the reason why we think that IOSCO is the place to be. We have an assessment committee, and we have an enforcement MMOU, multilateral memorandum of understanding. Just for this information, when I had the pleasure to be around the table for the first time as IOSCO member at board level, it was 20 years ago, a long time ago, we exchanged on a yearly basis 50 times information about possible case of insider trading. 20 years after, yes, ladies and gentlemen, it has been multiplied by 100. We are now exchanging information 5,000 times a year. What does it mean for me coming from Belgium? When I need to get information from a jurisdiction located in another continent, I will receive an information about the final identity of a beneficiary of a sell of buy transaction on a share listed on a company in 80% of the case. And in 90% of the case, I will receive an answer in less than 100 days. 100. Can you imagine the speed? And some of these investigations are already linked with crypto-based transactions. So it means that it works. And that's the reason why IOSCO, again, is the place to be in order to enhance collaboration and cooperation between our members. And it will be in the future even more, following guidance given to members on the MMOU coverage of this new product. And that's the reason why it's so important to deliver the right outcome for investors, to tackle issue at the regulatory perimeter. It's about trust coming from John and Mary in the street, you investor, you client, and removing regulatory arbitrage. Fintechs, and that will be my last conclusion, fintechs is of course more than just crypto assets and DeFi. Tuang and the team who is there, you see all the team, at least the leaders, Tuang and the team are already working on a broader fintech agenda for next year, 2024 and beyond, which may include tokenization and generative artificial intelligence. We cannot slow down because innovation does not slow down. If it's so successful, the 8th edition, it's because just innovation is there every day. So we need to be there and to be able to react very rapidly, and that's what we are doing. Last year, correct me, Tuang, you had the pleasure to tell to the audience that you, IOSCO Task Force, will act on its investor protection and market integrity mandate. Well, ladies and gentlemen, today we have finalized and published the crypto asset recommendation. In the next month, and I speak under the control of Val from the SEC, who is leading this second work stream, next month we will finalize our recommendation for DeFi. And I'm proud of what we have been able to do together. It means what has been accomplished through IOSCO, and a huge amount of praise goes to those who will be joining me now on stage, who have been instrumental to the delivery of this timely and tractable set of policy measures to help regulators tackle the risk posed by the crypto asset. Thank you for attention, and good luck with what we have to do this afternoon, starting to read the 72 pages of a new recommendation. See you soon. Bye.
So, good afternoon, everyone. It's a pleasure to be back at the Singapore FinTech Festival. My name is Damien Shanahan, and I'm the coordinator for standards development at the IOSCO Secretariat. And I'm delighted to be joined by an esteemed panel of regulatory colleagues, each of whom has been at the heart of the development of global standards for the crypto asset markets. So you've heard from our IOSCO board chair, Jean-Paul, who has just explained just how far IOSCO and its members have come over the last 18 months. But allow me to also introduce our other panelists today. So next to Jean-Paul, we have Lim Tuang Le. So Tuang Le is Assistant Managing Director of the Capital Markets Group at the Monetary Authority of Singapore. Tuang Le is also an IOSCO board member and the chair of our board-level FinTech Task Force. Next to him, we have Matthew Long, Matthew is a Director for Payments and Digital Assets at the UK Conduct Authority and is also the lead of our crypto and digital assets workstream at the FinTech Task Force. And last but not least, we have Szczepanik. Valerie is the Director of the SEC's FinHub and the lead of our DeFi workstream at the FTF. Now, just to reset a bit, so on the 2nd of November last year, we were here at the same panel talking about IOSCO's policy intentions under its crypto asset roadmap for 2022 and 2023. And at the time, we shared concerns about conflicts of interest, abuse of market behavior, and the custody of client assets. And we referenced, amongst others, Celsius, BlockFi, Terra Luna, Voyager, Three Arrows Capital, and signaled our intent to bring about global policy measures to tackle the significant risks of investor protection and market integrity in the sector. Now, that very same day, somewhat ironically, CoinDesk published its now infamous article about the FTX's balance sheet, or probably more accurately described as its Excel spreadsheet. So 1 year on, and building on Jean-Paul's reflections, let's unpack the key policy recommendations published today to address these risks, as well as the path ahead to promulgate and ensure the widespread adoption of IOSCO's policy recommendations for crypto and digital assets. So let me start with you, Tuang Lee. So as I said, literally within the hour, we published our final report on CDA. So tell me, what are the key elements and the headline messages to emerge from this report?
Thanks, Damien. Good afternoon to everyone. Very nice to see all of you here. Just a bit of a recap. Last year we were here, we asked the audience, how many of you feel that crypto should be regulated? I think more than half, I think 3/4 of the room raised their hands. So here we are this year, we have delivered the recommendations to regulate the crypto asset market. So Jean-Paul shared with you the 70 pages, so please have a read. So just to answer your question, Damien, I will just characterize it or caricaturize it into what I will call the 5 Cs. In Singapore, we have the famous 5 Cs that we used to aspire to: car, credit card, cash, country club, and what's the other? Condo, right? So that's the Singapore's 5 Cs. So today I'll just maybe introduce recap the work that we did using 5 Cs as well. First C, I would like to say that we all acknowledge that consumer harm has occurred in this space. You talk about Terra Luna, you talk about some of the exploits we've seen FTX. So if you look at how the market value has fallen for crypto assets, it reached to a high of about 3 trillion at a high, and then it plummeted to about 1 trillion after Terra Luna and after FTX collapsed. So right now it's rebounded to about between 1 to 1.4 trillion. Well, there's not been a big financial contagion to the broader financial system. What we acknowledge that consumer harm has occurred. Just take, for example, Terra Luna. I think the Luna coin was trading at a high of $116 before plummeting to zero. So we all acknowledge that consumer harm has occurred, at least in this space. So the first C, consumer harm has occurred, and we need to do something about it. And you mentioned FTX. So one of the issues that occurred in FTX, and you mentioned, Damien, is that of custody. The next C is custody. So, in traditional finance, custody is usually separated. It's held in trust, there's proper accounting. And we realize that in a lot of these crypto asset firms, they are not so. There's no proper accounting, there's no proper segregation. Yeah, so we're putting in rules like what we see in traditional finance to make sure that your client assets have the adequate protection that they do. So the crypto asset firm cannot just commingle their assets with yours. They cannot use your assets or rehypothecate your asset without your permission. They must also disclose how they are securing your assets. And in this space, there's this thing about private keys. How are your private keys secure? Once you lose your private keys, your assets are gone. So how do you ensure that the custody of your assets or your digital assets are properly done? So that's the next C, custody. The third C I will mention would be that of conflict of interest. in this space because of the way the technology works. A lot of the services provided by crypto asset service providers or CASPs are what we call vertically integrated. They do all the services under one roof. They custodize your asset. They also list the coin. They provide the platform for trading the coin. They provide liquidity. They also sometimes do proprietary trading on their own on the same platform. So in traditional finance, this is disallowed in many cases. So how do we address this? Firstly, they need to at least disclose what they're doing. What's their role that they're doing? Are they doing a platform? Are they operating a platform? Are they more of a broker-dealer type of entity as opposed to a exchange? So they must disclose what they're doing. And if there are conflicts of interest, how are they mitigating it? So we're also providing recommendations on how supervisors should consider whether some of these activities should be separated legally or they should be disallowed to begin with. So some of these need to be addressed. I mean, some of you may not know this, but some of the crypto asset firms actually list a coin that they are heavily invested in. So how do they decide what to list and whether there are mitigants in place to prevent front running and issues like that. So that's the other issue, the C that I will talk about, which is conflicts of interest. The other C that I'll talk about will be conduct of operations. How do they conduct themselves? How do they make sure that they are properly addressing cybersecurity risks? John Paul talked about that. How do they make sure that customers have the disclosures that they need on what they are exposing themselves to? And also, how do they prevent fraud from taking place? Is there insider trading that's going, or how to prevent leakage of information or material information? So that's conduct of business. And finally, the last C, cross-border cooperation. This is the borderless market. John Paul mentioned about it, where we need to cooperate cross-border to ensure that there is minimum regulatory arbitrage. So that's the 5 Cs for you: minimizing consumer harm, ensuring that there's proper custody of your assets, managing conflicts of interest, ensuring that there's proper conduct of business, and finally, cross-border cooperation. Thanks.
Thank you, Tuang Lee. So turning to you, Matthew, as the workstream lead for this project. So our May consultation report elicited a somewhat unprecedented response with over 80, responses from stakeholders, and they came from far and large from consumers, industry, trade associations, and firms. So could you maybe just explain what the key elements of feedback were to emerge from that consultation process and how they were taken on board in the report?
Sure, thank you, Damien. Where I'd like to start is with a thank you. So we sat here a year ago and asked you, will you help us? Will you come to the consultation and will you give your feedback? And you have, as you said, you heard from Damien, an unprecedented response. What I would say immediately that the majority of those that feedback was positive about the need for regulation to actually replicate and see, as Jean-Paul said, traditional finance into crypto. And where we did have feedback, it was very specific in terms of what could we change to make this better. So there are around 5 areas which it focused on. The first is that we wanted a taxonomy. So we wanted to take work, for example, of the FSB and FATF and come up with a taxonomy so you have some definitions. We then had reflections, as Tuang Lee said, on conflict of interest. But what it allowed us to do was to drill down into that next level of detail and define better guidance. The other areas that we received feedback specifically on was best execution and then also social media. So in terms of social media, what we've put in the guidance is that we want to see fair, clear, and not misleading guidance. So where you have influencers, difficult to say, that it is clear what should and should not take place. And then the final point that we got feedback was on data. Now I'll outline some of the feedback we got on data in terms of data transparency and recommendation 9. So in summary, it was a really positive response from consumers, from industry, from academics, and from other colleagues, which allowed us to change the guidance so that it was clearer and gave better recommendations. Thanks, Damien.
Thanks very much, Matthew. So Valerie, I'm privileged to have the crypto czar on stage with me today. So why don't we drill a bit deeper into the substance? So, I mean, we've seen a proliferation of crypto assets over the last 5 years, and we've also seen different jurisdictions adopting different regulatory approaches. So on the one hand, we have some jurisdictions that have existing regimes and apply those rigorously to the crypto asset sector, namely
I don't know
the
who you're
US.
talking about.
And we also have some jurisdictions that have adopted new frameworks to address these risks. You know, for example, MiCA in the EU. And then on the other hand, at the other end of that spectrum, we have some jurisdictions that have legislated for an outright ban, like China or perhaps India, I believe. So how has IOSCO gone about to sort of thread that needle and reconcile these seemingly very different approaches and to ensure consistency across the recommendations?
That's a great question, Damien. First of all, I want to thank you guys for having us. It's a real pleasure to be here. As a U.S. official, I have to start by saying that these views are my own and not necessarily those of the people I work with. But that said, I'm really excited to answer this question. When we took on the DeFi work, we had a bit of a head start. IOSCO published a report in March 2022, and the purpose of that report was to really lay down the kind of a level playing field for regulators across the world, to give them a good sense of what was happening in terms of this is the facts, getting behind the jargon, this is what people are doing with technology these days, and let's all have a common understanding of what's going on. From that report, we did a process much like the CDA report. We took a survey of IOSCO membership. We had meetings with folks in the industry, academics, researchers. We gathered a lot of evidence through our own research to come up with the proposed recommendations that we came up with in the DeFi report. So just to take a step back, DeFi is a really exciting area. It's taking technology and applying it in new ways to bring about financial products and services in many cases. But at base, what's happening in many cases is the provision of financial services, the offering of financial products, and engagement in financial activities. And when that happens, there are standards that apply across the globe, especially through the IOSCO jurisdictions that participate in IOSCO. And these are basic kind of ground level principles that really apply when folks are doing things with other people's assets. And so they apply for really good reasons. And I think what we tried to bring forth in this report, which was difficult because we're working with a fast emerging, very much developing and emergent area in DeFi, is trying to come across with recommendations that allow for innovation, but at the same time, protect investors, protect the markets, and set the ground level. So I like to look at these recommendations as the foundation. This is a foundation that exists across IOSCO membership of principles and standards that we all kind of agree to at base. Each jurisdiction is allowed to kind of build on top of that foundation, framing and painting and decorating the way that they do. They have their own approaches to regulating financial activities. And so we have to allow for jurisdictional differences. Across the world, people have different definitions for what is a financial instrument. They have different approaches for regulating them. We have to lay down a flexible but solid framework for people to either build on or apply their existing regulations. So if you take what Damien said at the beginning, there are jurisdictions that have taken the position that their regulations and their rules do apply to activities in DeFi, and they have been applying them. And there are other jurisdictions where they may not have regulations that clearly apply, and they may be building new frameworks or applying existing frameworks but expanding them in different ways. So the work that we've done really is to set a framework, but to allow for jurisdictions to have their differences, but to apply the standard principles across financial activities that apply in the traditional financial space.
Thank you, Valerie. So back to you, Tuang Le. The FSB have done a lot of policy work on crypto assets as well, but obviously focused on financial stability risks. The BCBS, the Basel Committee, have done work on sort of prudential requirements. FATF has obviously done has done a lot of work on AML and CFT. And equally, a lot of the international bodies like the IMF, the OECD, and the World Bank are also interested in this sector and regulation. So there could be possibly too many cooks in the kitchen. But how have you and IOSCO gone about to ensure that its work is clearly demarcated yet coordinated and not duplicative with the work of these other bodies?
Thanks. You just follow up your analogy on too many cooks in the kitchen. I don't think there are too many cooks. I think we're all master chefs, and the way we cook our own dishes, we have different dishes to cook. The FATF is focused on anti-money laundering, and rightfully so. Financial Stability Board is looking at financial stability. IOSCO looks at market integrity and investor protection, whereas BCBS looks at how is the crypto assets, what's the impact on banks, and how do you look at banks' investments and involvement in crypto assets. And of course, all these potentially could have financial stability implications. As I was mentioning earlier, luckily for us, the crypto winter didn't result in anything significant in terms of financial stability. So that's a very good thing for us, but we can't take it for granted. We need to continue to monitor, continue to work together with the FSB to make sure that if the issue grows big enough, we have to have new measures or considerations on how to tackle it. So we work very closely. Let's take for example, our relationship with the FSB. We have a very good collaborative working relationship with the FSB. They focus on financial stability issues. Well, we look at market integrity and investor protection, and we talk regularly. And if you look at the high-level recommendations by the FSB, they met very well to our 18 recommendations. So there is a lot of synchronicity, there's a lot of consistency. So FSB recommendations are largely high level, really pitching at a very broad level, whereas IOSCO comes in to give a couple of layers of granularity to look at specifically market integrity and investor protection to provide recommendations that are implementable for the sector, that provide guidance and implementable steps for regulators to take for their respective security markets. So it's complementary in nature. We all cook our dishes. We have different dishes to present to the market. So I would say it's complementary rather than competitive for lack of a better word. Thanks.
Thanks very much, Tuang Li. That's very reassuring and good to know that we have a Michelin-starred dish out of all of this. So turning back to you, Matthew. So data and transparency sort of remain a real ongoing challenge in these markets, and not just for market participants, but also for regulators and seeking to monitor the sector. And despite all the talk of transparency and shared ledgers, I think what we've observed through our work is actually most of the trading through these CAS, or these crypto assets service providers, actually happens off-chain and OTC. So how are we going to go about shining a light on all this? And is there a silver bullet solution here? Is it just a case of simply applying our sort of usual monitoring and supervisory practices, or are there additional angles that we need to take into account as regulators, particularly given the sort of a use of underlying distributed ledger technology?
Thanks, Damien. Sadly, no silver bullet. I think one of the important things is when we reflect on the opportunity to use the blockchain is that, as you say, the majority of the trades are off-chain. And what that also means is that off-chain activity is often opaque. So what is hidden in there is abusive practice, criminals, and people that are exploiting that whole ecosystem for nefarious and for bad ways. So what recommendation 9 says, is that we want a global data standard. And what I really call upon us is everyone here that's operating in this area, be us a regulator or be us industry, is that we want to make sure that we can see on that off-chain data what's happening, and particularly post-trade, so that we can understand. And so when you've seen presentations earlier about using AI and other things that can sit over the top of it, what you need is the good data in the first place to be able to do that. So in summary, Damon, that we want safe markets, and to get to safe markets, you've got to have clear and transparent data. And one of the other things that, an observation of crypto firms and CASPs and VASPs, is that they're often global and moving very quickly. So that global mechanism means that we've got to have a global data solution which complies both jurisdictionally to national legislation, but also to global. And that's the great thing about IOSCO. IOSCO can make that recommendation over 130 regulators. My final point on this is this may be a report for regulators, but it tells you what's coming if you're in industry. It tells you what we're thinking. It tells you the standards you can embed now to actually get greater safety in the market and ultimately to protect those consumers that are using crypto.
Thanks very much, Matthew. So, Valerie, you started to touch on it, but let's turn back to DeFi. So the consultation period is just closed. I think we received 45 odd responses to the consultation, and we're aiming to sort of finalize our DeFi recommendations by the turn of the year. There's a lot of talk about DeFi actually being sort of of decentralization rather being more of a continuum than a bright line in practice. So my first question is there such a thing as full decentralization in the current markets? And what challenges would this pose for regulators, and how is IOSCO proposing to deal with this?
Thanks, Damien. So you're right. We came up with 9 recommendations. So we got half the recommendations as Matthew's report, and we got about half the comments. So the math works out. So decentralization, it doesn't really have a clear definition, even in industry, of what decentralization is. But what we focus on is the use of blockchain-enabled technology to bring about financial services, products, and activities. And this is a pretty broad topic because you're talking not only, I think in the CASP space, you're talking pretty much about intermediaries where you can put your finger on it and kind of look at it, put it in the box. I think with DeFi, you're looking at an entire market where you've got issuances happening on the blockchain. You've got protocols set up where you have marketplaces enabling kind of peer-to-peer or peer-to-pool transactions. You've got different modalities, I would say, to bring about activities and products and services that we're all familiar with. So how do you look at that as a regulator? I think, first of all, you have to cut through the labels. You have to say, what does decentralization mean? What is decentralized about any particular arrangement? So what these recommendations attempt to do is first have the regulator understand what's going on, get behind the labels. Oftentimes there's a narrative or a jargon. A lot of times there is a laser focus on the word decentralization and no one really knows what they're pointing to when they're talking about decentralization. Our point is understand any particular arrangement, understand what products and what services and activities are happening. Are they financial products, services, and activities first? If so, who might be a responsible person or entity that is controlling the provision, the offer, or the activity that we're looking at? The provision of the service, the offer of the particular financial product, or the activity. Is there somebody there controlling it? I think what we've found as we've examined this space is that code doesn't just materialize out of thin air and start operating on its own. There are humans behind it. There's generally a lot of activity we're used to seeing. There's fundraising going on, oftentimes equity investments. There's development of products. There's development of software. And then there's the provision of financial services and products. And I think the idea is to say, let's look at it from kind of a big picture and say, let's figure out who are the active participants in this arrangement or activity. And is there someone here that is providing a service, offering a product, or engaging in an activity that is regulated? If that's the case, and I think there will be responsible persons, people who are responsible for regulatory obligations, for making sure that if you're engaging in regulated activity, that you're registering with the appropriate regulator, that you're complying with basic disclosure and investor protection and market protection frameworks. And so these recommendations are really meant to kind of get beyond the jargon and the words that are used and say, who are the, either the particular people, the humans, or the entities that are involved, and are they actually controlling what's happening here? And so, generally speaking, that will be the responsible person in terms of who has regulatory obligations.
Thanks very much, Val. That was very clear. So, turning to you, Jean-Paul, I mean, the crypto markets are fundamentally global in nature. The cross-border, the cross-border distribution models, and the very significant retail investor footprints, that we've observed. So, it seems to me that IOSCO and its members have got their work cut out in terms of how to stamp out regulatory arbitrage. Could you give us some thoughts on how you're intending to rise to that collective challenge, and in particular, what your plans are around implementation monitoring?
Well, that's a great question. Again, Damien, two comments, if I may, about the duty and expectation relating to what we have to do together at national level. Outreach, I would say, and then implementation. Outreach is quite surprising what I will tell you, but I am pretty sure that most of you are in fact having a first experience today to see financial cups on a podium. Most of you are entrepreneurs, you launch a new business, you believe in your capacity to have added value for your client, but I'm not sure that you already had the possibility to see these strange people on this people. You are not working for a bank. Hopefully you're not, I don't know. You are not working for insurance, a pension funds, an asset, even a hedge fund, even a crowd. So it means that you are not forced to see us from time to time. You didn't have a fit and proper assessment. You don't have a compliance officer, a secretary general, a CRO, or even a lobbyist discussing you first. And frankly speaking, you are maybe not interested at all in seeing us. Because you are a fast mover, you start your business from zero, you took a lot of risk, even your own business and fund, and you are a fast mover. So maybe in 1 year, 2 years, 3 years, you will sell your business, and hopefully with a profit. That's your job, your life. So our duty is to explain what we are doing. And it means that roadshow is not only for you, it's also for us. We are very important roadshow today, thanks to Tuang and the dynamism of the ecosystem in Singapore, which is well known for promoting. Then I will have the pleasure to travel all around the world, at least if my friends and colleagues accept that I will be there in the city. And I have to explain what we are doing. So, which is also challenging for us, because most of the time we used to speak about Basel principle, FSB principle. Most of the time we don't have to push so much information, because you need information when you have a license as a banker. Here, most of the time you don't need that. So that's our duty to explain what we are doing, which is a win-win approach. You need us if you want to explain to your client, fine, my business is in line with IOSCO expectation. IOSCO, it means, can you imagine, consensus between 130 jurisdictions. It's not binding. The national legitimacy, the political is at national level. Then it will be the job of government to require from you, from your client, to follow this principle, or at least on a voluntary basis, I would say. Okay? You will have also good practices about how to manage your business at national level. So that's the first aspect, outreach. And that's the reason why I'm so pleased to be here with my colleagues to explain what we are doing. And again, and it was also stressed by Tuang and the other colleagues, what we are saying is something which is not new for some of you who are in the business, asset manager, bank, trading venue. How to segregate your client assets. How to avoid problem about this, about custody. Something which is absolutely a traditional task for 20, 30 years. But we think that in order to ensure trust,
that it has to be done also for the CASP. Then for this, we have a toolkit. Launch on time, due to the launch of our excellent task force, before the crypto winter. So it is not a government by accident, but at the same time, we were able to take into account what happened last year, some collapses, accident, question, and that's also due to the fact that we perform, I think, a sound consultation. 80 response, it's a lot, I would say. And as stressed by Matthew, not a pushback from the industry. Most of the time about details, as stressed by Matthew, but also to say, okay, we need this support. And then it will be the time for implementation. Yes, enforcement is part of the job. It's a balanced approach. Prevent problem. Explain what we are doing. How to be aware that what we are doing is clearly understood. It's about previsibility of our policy. But if needed, we will enforce this because it's part of the job. So it's, I would say, a comprehensive toolkit, and as stressed by Damien's question, therefore we have additional tools. MMOU, I already stressed the importance of MMOU, which is one of the best, quote, marketing tool of IOSCO for the quality of a cross-border cooperation. Okay? Of course, we are taking into account the fact that there are some differences between jurisdiction about the kind of framework which has been developed, of not yet developed. That's the reason why our toolkit is so important, because it's a well-known substance of a form approach, and with the, I would say, the use of this 18 regulation, I think that we are now able to start a positive journey in order to ensure trust and client protection.
Thank you very much, Jean-Paul. So now, turning to Valerie and Matthew, in turn, could you perhaps sort of expand a bit on where you see what the next 12 months hold for crypto assets and DeFi?
So from my perspective, as Jean-Paul outlined, we've launched the report today. It's on the IOSCO website. The key element for this now, as Jean-Paul has said, is implementation, implementation, implementation. It has to be that this report doesn't sit on a shelf and gather dust. It has to be that those 18 recommendations are recommended by regulators, but most importantly for me, that they're listening to industry now. Because if industry pick up that report and see the things that global regulators want to see, there's no surprises here. It's all written down, and if you actually take them and then build them into their working practices, this will basically mean two things. Customers and consumers are safer globally, and your market gets more integrity. But not only that, some of the things in that report also apply to Val's area. So actually, because we work so closely together, and these two reports sit side by side, there will be an umbrella note that covers them both. But there'll be no surprises in what that says, because we are one team working together and one global team. So please read the report. Please take the recommendations seriously. Please think about implementation in your country, jurisdiction, or country, company, or jurisdiction. Because ultimately, if we listen to them now, this will mean that people are safer and the market is safer.
Yeah, I echo that, but I also think this is a really exciting time for entrepreneurs and innovators out there, because now you have a roadmap of where the regulatory space, what they expect. And so this is now where the real innovation can happen. You can take these technologies and start building compliance into them, and you will be so far ahead of your competitors because you will be the one with the staying power. You'll be the one building this compliance into the technology. I'm really excited about that prospect, and I think that can happen over the next 12 months. And you don't have to do it alone. Regulators have innovation offices across regulators across the world. I had one up at the SEC. We welcome people to come talk to us. We want public to come talk to us, and let the regulators help you talk through what they expect, and help you steer yourself in the right direction and have more longevity than your competitors will, because you're actually paying attention to what these reports say. Thanks.
So Tuang Li, we've heard from both Matt and Val on both on DeFi and CDA and what the future holds the next 12 months. Could you perhaps sort of expand a bit on how the two reports are consistent, and how they interrelate, the interoperability between the two, and how we've designed that?
Sure. So the two reports are complementary, right? They sit on a common, what we call it, language. The common thing that cuts across is the use of distributed ledger technology, right? So our view is that technology is but an enabler, right? So Val has said, really look at the activity. So don't just look at the technology, peel through the technology, look under the hood. Is it the same activity that we're looking at? Is it the same risk? If it's the same activity, it's the same risk, we should regulate it the same way. Our outcome should be the same. Like we always talk about the duck test, right? It quacks like a duck, walks like a duck, looks like a duck, we regulate it like a duck. So let's look at it, at the essence of it. So if you look at the two reports, Val talked about DeFi, looking for responsible persons that are activities that are being conducted in the DeFi space, so-called DeFi. So a lot of DeFi is not really truly decentralized. There are central actors at play. There are responsible persons that you can look to. The code doesn't jump out of a box and decide to run on its own. There's somebody behind it. So look for that person, look for the responsible person or the activity, and see whether it needs to be regulated as a DeFi type of arrangement, or is it operating as a CASP? Which then Matthew said of recommendations would need to apply. So what we are coming up with the finalization or soon finalization of the DeFi report would be what we call an umbrella note that will tie the two reports together to see how they interoperate. And so you need to look at it as a systemic whole. It's not two separate reports. They are separate reports, but they interoperate. There are linkages between one report to the other, depending on the activity and the arrangement that's being done. So have a look at them when they are finalized. So that's the first point. And the next 12 months, what are you going to look at? So implementation is key. Implementation. And of course, we got to look at what else is out in the horizon. John Paul mentioned about artificial intelligence and tokenization. So in the main stage just now, MD Ravi Menon talked about the benefits of tokenization, how you can tokenize different types of assets using the distributed ledger technology. You can talk about atomic settlement. You talk about how tokenization can fractionalize assets into finer tradable components. So what does it mean for the capital market? So things are things that we will have to look into. So that's on tokenization. AI. Maybe since we did a survey the last time, maybe we can have a show of hands. How many of you are familiar or know about AI and generative AI? Show of hands. Okay. All right, so my next question would be, do you think the application of generative AI or AI in financial markets should be regulated, or should we consider regulating them? Raise your hands. Yeah, see, similar response to what we have in crypto last. So we have to look into this space, or at least consider them and pick up the rock, look at it, and see what needs to be considered. And so this will be something that we'll be looking into, tokenization, artificial intelligence. So we want to continue the dialogue with the industry because we don't have a monopoly of ideas. We want to consult the industry. We want to get involved. We want to hear from you. We are not the full experts. We're not experts, especially in the technology. We need input. We need suggestions. And we need you to educate us so that we can have an iterative discussion. So this is what we intend to do. So a co-collaborative, a co-creative and collaborative approach to the next wave of things that we want to do. Yeah, thanks.
Well, thank you very much, Tuang Lee. So I'm looking at the clock. There's about 50 seconds. So is there an opportunity for one last question to this panel? If anyone wants to. If not, I will...
I think that people would like to read as soon as possible the paper.
Exactly, yes. You're all eager to read the paper, as Jean-Paul has just told me. So I'm looking across the room. I can't see any hands raised, but I'd just like to thank all of you for participating on the panel today. Thank you very much.
Thank you very much.